Cathie Wood is on this $5 stock, and we think it might be a good choice for you as well, so sit tight as we introduce you to Archer Aviation. But before we do that, subscribe to our channel, $1 World, for regular stock market videos. When you think about electric vehicles, or EVs, brands like Tesla, Rivian, or NIO likely come to mind. However, it might surprise you to know that EV technology is expanding beyond the roads and into the skies. Several companies are actively working on developing small electric vertical takeoff and landing, or eVTOL aircraft. One of the prominent players in this emerging field is Archer Aviation. In 2023, Archer has made significant strides toward making commercial electric air taxis a reality, catching the attention of renowned investor Cathie Wood. But the question remains, is Archer a worthy addition to your investment portfolio? You might be wondering, what exactly is an electric air taxi? At first glance, the concept of eVTOL taxis may seem like something out of science fiction. However, it's an intriguing idea that's worth exploring. Archer Aviation's core mission is to offer an alternative mode of transportation for city dwellers stuck in traffic congestion, a swift and environmentally friendly solution involving air taxis. Think of it as an attempt to become the Uber or Lyft of the sky, but the company's operations are more intricate than that. In a significant development, Archer recently secured a special airworthiness certificate from the Federal Aviation Administration, or FAA, for its flagship Midnight eVTOL aircraft. This certificate is a pivotal milestone because it authorizes Archer to initiate flight tests, paving the way for the company's progress towards widespread commercialization. Furthermore, Archer has actively engaged with the U.S. Marine Corps, demonstrating the capabilities of its eVTOLs. The military has expressed interest in Archer's aircraft, citing their quieter and safer attributes compared to traditional helicopters. This has raised the possibility of eVTOLs replacing helicopters for various military operations, including rescue missions. The journey to bring a new electric vehicle to market is undeniably long and costly. It involves various factors such as sourcing raw materials for EV batteries, labor-intensive production processes, and substantial expenses in research and development. To put the financial aspect into perspective, since its inception in 2018, Archer Aviation has successfully raised a substantial $1.1 billion in funding. In its most recent funding round, Archer secured an additional $215 million in investment from notable backers, including Stellantis, Boeing, United Airlines, and ARK Invest, managed by Cathie Wood. While the magnitude of funds required to advance toward commercial operations is considerable, there is a silver lining. Archer enjoys consistent and substantial support from its investors, which can be seen as a promising sign for the company's future endeavors. For instance, United Airlines has invested in Archer for the third time, demonstrating its ongoing commitment, and Stellantis has pledged to acquire additional equity as part of a strategic agreement signed in January. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. As of September 26, 2023, Archer Aviation Inc., or ACHR, trades at a stock price of $5.03, with a market capitalization of $1.33 billion. The day's trading volume reached 9.7 million shares, and the stock experienced a high of $5.35 and a low of $4.91. Over the past 52 weeks, Archer has seen a high of $7.49 and a low of $1.62. The day began with an opening price of $5.11 and closed at $5.03, reflecting a decrease of 3.08%. Additional key statistics include a beta of 1.67, trailing 12-month earnings per share or EPS of negative 1.95, a forward price-to-earnings ratio or P/E ratio for the next 12 months or NTM of 4.07, and a trailing 12-month EBITDA of negative $491.60 million. The return on equity or ROE for the trailing 12 months stands at an impressive 108.13%. However, it's important to note that Archer Aviation is currently a pre-revenue company with no recorded earnings or revenue. The company has successfully secured substantial capital, including a recent $215 million investment round led by Stellantis. Archer also boasts support from renowned investors like ARK Invest and United Airlines. Archer Aviation is a notable player in the electric vertical takeoff and landing aircraft industry, working on its inaugural commercial eVTOL aircraft, the Midnight, scheduled for service introduction in 2025. The company has formed strategic partnerships with major entities such as Stellantis, Boeing, and United Airlines to advance the development and commercialization of its eVTOL aircraft. In a market still in its nascent stages, the eVTOL industry is expected to experience rapid growth in the near future, and Archer Aviation is well positioned to harness this potential thanks to its robust partnerships, experienced team, and innovative technology. On the other hand, considering the substantial amount of capital that has been invested in Archer Aviation and the recent achievement of airworthiness certification, one crucial aspect that investors are likely pondering is the company's lack of revenue generation at present. Normally, this would raise a significant red flag, potentially causing investors to dismiss the stock as an option. However, it's not easy to walk away from Archer when you consider the remarkable progress the company has made throughout this year. According to the company's filings, Archer has set its sights on commencing commercial operations by 2025, which is just a little over a year away. While this timeline may seem ambitious, there are compelling reasons for the company to stay on track. Earlier this year, Archer secured a significant contract with the U.S. Air Force, valued at potentially up to $142 million. Moreover, based on a 2021 agreement, United Airlines has a purchase order in place for up to 300 of Archer's aircraft, with the total contract value potentially reaching an impressive $1.5 billion. The sooner Archer achieves commercialization, the quicker it can scale up its manufacturing, fulfill orders, and begin generating revenue. Archer's trajectory brings to mind the journey of Rivian. When Rivian went public in 2021, it was essentially a pre-revenue company. However, over the past 2 years, it has generated billions in sales. Despite Rivian's remarkable foray into the EV market, it still faces a considerable path to profitability. With Archer, there's a sense that the company might follow a similar trajectory, potentially reaching significant sales figures rapidly. Should this scenario play out, the stock could experience substantial momentum-driven movements. While this might initially lead to feelings of excitement, some investors could find themselves in a challenging situation if momentum traders decide to sell off or if the company opts for a secondary offering. Therefore, prudent investors should closely monitor Archer's cash flow once it transitions to commercial operations and understand that investing in Archer is a long-term commitment, akin to venture capital or VC. Venture capitalists typically exhibit a higher risk appetite compared to conventional investors. Consequently, VC funds support startups during their early stages. If a VC-backed company grows and becomes an industry leader, venture capitalists can reap substantial returns on their investments. However, it's important to acknowledge that many of these investments do not succeed. There are indeed high-risk, high-potential reward types of investments. There are numerous positive aspects to consider regarding Archer. The company enjoys strong strategic backing from industry giants, and there's evident interest from the government in its offerings. The primary risks primarily revolve around whether Archer can adhere to its commercialization timetable and the potential liquidity challenges it may encounter if things don't go as planned. Given the consistent support Archer has received from influential entities like Stellantis and United Airlines, along with the transparency investors have into its expected future revenues through established purchase agreements, it's conceivable that a modest position in Archer could serve as a reasonable hedge within your EV investment portfolio. However, it is essential for investors to remain cognizant of the inherent risks associated with investing in pre-revenue startups like Archer. My advice would be to closely monitor the company's updates and financial reports to ensure it continues its steady progress toward commercialization and to observe any further interest it attracts from airlines or government entities. The stock of Archer Aviation Inc., or ACHR, is currently enjoying a wave of positive sentiment from various quarters. Investors, analysts, and industry experts are expressing optimism about the company's prospects in the burgeoning electric vertical takeoff and landing, or eVTOL market. With strategic partnerships with major corporations like Stellantis, Boeing, and United Airlines, as well as a recent significant capital injection of $215 million led by Stellantis, Archer has garnered support from both high-profile investors and established industry players. Additionally, its innovative approach to eVTOL technology and its ambitious yet achievable goal of commercializing the Midnight aircraft by 2025 have captured the attention of those closely following the electric aviation sector. This widespread optimism underscores the growing confidence in Archer Aviation's potential for future growth and success. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.